Today, we will learn to trade rallying markets with full top-down analysis. However, I will also teach you an alternative and relaxed way of trading for all the beginner traders. If you are ready, let's do this. Today, let's think about point of interest areas and why they actually matter in trading. In reality, everybody has a different kind of point of interest or POI area they focus on. They might use indicators, simple price action, or even smart money concepts to define those areas. So, overall, you will always have some kind of idea about where your point of interest is on the chart. Now, the most important question is this: when the price comes into your point of interest area, what should we actually do next? For example, imagine this POI area is for a bearish setup and I'm looking to take a short trade here. If you look closely, once the price comes into my zone or pocket, I could technically take a blind short right here. This is definitely possible, and sometimes I personally do that in certain situations. However, this is a low probability trade and it requires a reduced risk management. The reason is simple: you do not have any lower time frame confirmation in this moment. So a better approach is usually to use lower time frame structure and trend for confirmation. For example, inside the POI area, if I see price keep making new lower lows and then start to break down aggressively, that tells me that sellers are taking the control now. The selling pressure shows a real seller power, and now I can look for short trades with much higher confirmation. In this case, we can call it a confirmed short instead of a blind short. You can absolutely use both trade ideas in your trading plan if you want, but you cannot assume these are the same type of trades. One of them clearly has a lower probability, and the other one has a much higher probability of success. If you were watching the Ethereum chart recently, you probably noticed a pretty clear and important pattern forming on the early charts. What was happening was one of my favorite patterns to trade, where the price was overall stuck in a strong crushing downtrend. During this downtrend, price kept pushing back into these imbalance areas and also tapping into previous support and resistance Philip levels. In both of these situations, you can clearly see how they create really solid short selling opportunities. So, when I saw this last setup with that imbalance and the support and resistance Philip point, I immediately started thinking about another crash coming. And if you carefully look at the chart, you can see that clean crash actually did not happen at all. Instead, with that last pattern, even though I fully expected a crash, the setup failed really badly. It completely broke down and basically destroyed my trade idea. This is exactly why it's so important to check the lower time structure and the overall trend before taking a trade. Now let's drop down to the 5-minute chart and talk about this little more. When I was looking at this last setup, I also noticed the previous day's low level sitting right below the price. That detail alone actually gave me even more confidence to consider taking a short at this trade. This was because it was a very logical and expected price movement based on where we were on the chart. But if you carefully look at the inner structure, there was this very clear and undeniable uptrend moving upward, and upward, consistently pushing the price higher. So the lower time frame was not aligning with my higher time frame idea at that moment, which was a red flag for me. In my point of interest area, I should have seen something very different happening. I should have seen a bearish trend or a bearish structure clearly forming and moving toward the previous day's low area. For example, I would have wanted to see a clear and strong microstructure break followed by a couple of break of structure moves, starting directly from my point of interest area, the POI area. This could have been a great trade in my opinion, but unfortunately, that confirmation never happened. So, like I always say, combining liquidity, imbalances, and structure together all at the same time will give you the best and highest probability setups in your trading journey. Okay, people, this is it for today. Please take care and see you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free TradingView indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.